evening. Don Smith here with our update February 24th, 2016. We're going to take a short look at the Dow Jones. Today closed up 53 points after being down 155, which is pretty bullish action, short term, mind you. Okay. Notice the declining volume overall in this picture. I think we're going to get a rally up to possibly the 200, possibly over the 200 day. But I do think we're going to run into some serious trouble up here around 17.5. And these rallies can be very sharp and very quick because a lot of it will be short covering, and it'll be a lot of non-believers that didn't believe that the market could go up. They only thought it was going to go down lower. And this is what usually happens in these situations. The market, as I mentioned many times before, is designed to fool the greatest number of participants so that only a select few really make money. This is how it works. Anyway, we'll just quickly look at Facebook. Facebook I do not like. I do not like this quick run up here, straight into the guillotine and then a sharp reversal down. Now it's rallying back up. I don't think it's going to overtake 117 here. Notice the declining volume on the recovery here, but very high volume at the top, and on the way down, very high volume, like 75 to 100 million shares a day. I mean, this is serious amounts of cash sloshing around here. Now let me just quickly show you GDX, which is the Gold Miners Index. Today it did an intraday reversal. Gold was up considerably higher in the morning at 1252 range. I didn't see the exact number. I was tied up with other things, but however, it did sell off just very recently. It sold off down to 1220, and the gold stocks told me that was about to happen because they had already reversed from their highs in the morning down to much lower levels by the afternoon. Some of them closed in the red as a result of that. Taking a quick look at let's do Barrick on Toronto. Barrick on Toronto did an intraday reversal, a high of almost $20, a low of 18, closing at 1840. That's quite a reversal. You had overbought territory here for the last number of trading days. These stocks have been seriously overbought for quite a time here. I think it's time for some kind of a nasty correction. And the gold market can punish the people coming late to the party. Mostly amateurs will, if they're not positioned to withstand a serious correction, which may take gold down to 1166 after about maybe 2 or 3 weeks. I think we'll get some kind of correction here. So I would imagine that the gold stocks will probably do this type of a pattern, probably a little flag, which will take them down to probably the 50-day average, which I would imagine in a couple of weeks. I would think you'll probably be able to pick Barrick up around 16, something in that range, depending if gold holds the 1166 range. But I'm sure we'll get a strong bounce at that level, but I do believe that when it drops below 1189, it'll find its way down to 1166 very quickly. Let's have a quick look here at same thing with the S&P 500. It's it broke out above this minor range here slightly the other day, and then it sold off again this morning down to this level, and then it rallied back up. And the after-hours futures are up about 60 points right now as we speak. So I'm not sure if that translates into S&P points, but a fair bit, I would say, probably 8-9 points, I guess. Anyway, something in that range. Bottom line is we're in rally mode here, and I think the rally is going to intensify and accelerate to the upside. And the key here is to watch the volatility and watch it decline to the point where people think that nothing can go wrong, and of course that's when everything will. And that will happen when this VIX drops down to 21-ish range. So I foresee that happening in short order here. In the next month or so, I think it's going to, the markets are going to do relatively well, but it'll be a very good opportunity to unload your stocks. I'm going to just show you something briefly here. We have the gold 6-month chart here. Extremely bullish pattern. Parabolic move upwards up to 1262. This chart is somewhat outdated. It's 19th of February, so it's a few days old, but basically what happened today was gold did get up to about 1250, but then a huge amount of selling came into the stocks and to the metal. And I do see that I do view today's action as quite bearish short term, and I am sincerely hoping that we do get a nice healthy pullback, because I want to re-enter this market with a vengeance, no question about it. Now we can look at the longer term gold. We can look at 6 years of gold here. You see the falling wedge that it broke out of here. Very bullish pattern, very strong move upwards here, but just horribly overbought short term. So that would about do it for tonight's update, Wednesday, February 24th, 2016. So the two calls that I'm making is weaker gold short term, stronger equity markets short term. This will coincide with a stronger Canadian dollar, a stronger oil price, and also a slightly stronger US dollar. Thank you for listening.